But the last question for today, Bruno, this is at the back of one of the previous episodes that dealt with property flipping versus property investments and obviously paying VAT. So the follow-up question goes as follows. So for VAT, they want to know when to register, when to start spending to ensure that all input VAT can be claimed, including the property transfer duties, and the difference where they're in for the sole prop, the PTY and trust, and then finally how and when obviously this claim can be made. Bruno?
Dealing with property acquisitions and the implications of that. We touched on it last week, and we had briefly spoken about the consequences of buying a property from a VAT vendor and the purchaser's liability to pay VAT for in terms of that transaction. We also spoke about situations where where purchasers buying a property from a non-vendor as a second-hand good, for which a lot of properties are, and the ability to claim notional input tax on that transaction. So if we bring this together and we start having a conversation over the practical aspects of a person buying a property and having to think about the VAT components of the property, the first presumption I'm going to be making is that the seller is in fact a VAT vendor. So we're not going to have a conversation again about notional input tax claims, where we're assuming that you're buying the property from a VAT vendor and you're liable to pay VAT on this transaction as a property investor. Now that you've paid VAT, the next thing that you need to think about when entering into the transaction. So you haven't paid the VAT as yet, but how are you buying this? How are you buying this property? So if you buy the property outright and the person simply sells you the property and you're paying a purchase price for the sale of this property, the person selling the property will be obligated to somehow include VAT in this transaction cost. And you as a purchaser will be liable to pay VAT in respect of this transaction cost. Now, in order to be able to do this and to, well, you'll have to pay the VAT, whether you're VAT registered or not, but in order to be able to claim the input tax on that specific sale, you have to be a VAT vendor. So you also have to be VAT registered, and you need to retain the invoice for the purchase price, and the invoice needs to contain certain basic details. So if you're buying a property and this property, the VAT is being levied on this property, please register. Have proof that before conclusion of this contract that you have at least applied for the registration as a VAT vendor. It is very, very, very important that you do so. But another thing now to consider is the possibility of zero rating a transaction. Now, all this means is no one pays VAT. Why? Because you're buying something that ordinarily you'd have to pay VAT on, but everyone knows that immediately after you buy it, you're simply going to claim the input tax. Now, input tax, all that means is whatever VAT you've paid, you're going to claim back from SARS. And as we discussed last week, this is because the end user is ultimately the person that has the VAT obligation. Up until that point, most of the traders pay VAT and claim VAT back. So sale of a business as a going concern is one of the mechanisms used to zero rate transactions. Now, how this works is the person selling the business as a going concern has to sell it under certain circumstances, has to be VAT registered, and has to sell it to someone that is VAT registered, or and it's advised by one of SARS's interpretation notes, at the very least, the purchaser should have applied for registration as a VAT vendor prior to concluding the agreement. Now, if you can tick all the appropriate boxes for zero rating the transaction, all that happens is VAT is basically not catered for, is not factored in to this calculation at all. And ultimately, the person sells, the purchase price is the purchase price without any VAT inclusion, and the person buying the property acquires the property without having to pay any VAT, meaning that obviously they can't now go to SARS and try to claim input tax because there was no VAT payable in this transaction. So those are the two predominant ways of actually dealing with properties, especially when VAT is applicable. Registration process, usually as a purchaser, if you do want to claim input tax, have the registration happen beforehand. And if you do want to claim input tax on anything that you do to the property, obviously you have to be VAT registered in order to be able to claim that input tax. So very, very important that before you incur the expenditure, that you are a VAT vendor or have applied for VAT registration. A part of this question also dealt with the how do we go about doing this? So that's not so much a Bruno question. I work with the accountants normally that take care of the back end, e-filing, submission of documents, submission of invoices, that sort of thing. I deal mostly with the tax disputes and strategy, but your accountant should be able to answer that question. In fact, all accountants that I know can very easily claim input tax on any VAT transactions.
There you go. So thank you very much there, Bruno. That does bring us then to the end of today's 3 questions and 3 answers. And we'll be see you guys again next week. Thank you. Thank you, guys.
Cool.
Thanks, guys. Cheers.
Cheers.